At a kind of super basic introductory level, so obviously you see on the screen number one, lots of different business activities and asset classes. So that's something that I've noticed as an operator in the industry, but also as a, the owner of a bookkeeping firm that almost exclusively serves real estate investors. Tons of different activities. You can have one business and there's like five different business activities. They'll have rentals, wholesales, flips. Maybe they do a little bit of private lending. Maybe they're also an agent, or own a brokerage or do some property management. Like they're kind of like a serial entrepreneur type group of people. And so you'll have a lot of things, potentially flowing through one company. Once they grow, they'll split everything out the way they should, but especially real estate investors who are just starting, they're kind of trying to figure out what works. And so they're doing all these different things to try to figure out kind of what their niche within their industry is going to be. So to me, that's something that's, yeah, go ahead, Margie.
I was just going to say that was something that was a big aha when I started listening to you, because I didn't realize that rentals, being a rental property owner versus a flipper versus a wholesaler, I did not realize that they're entirely different things, but they still fall under the REI banner.
Yep. Yeah. We kind of, there is a debate about this within the real estate investing industry. So this is like, true insider baseball. But yes, some people say real estate investing is just the rental properties, right? We're building long-term wealth with the rental properties. We're actually investing, like rental properties are an investment. Flips, wholesales, some of the other stuff you'll see is more transactional. So like that's more of the business side of real estate investing. And so, some landlords say that flippers and wholesalers are not real estate investors. They're just like, it's just another business, right?
I
But
can see that.
that's
Yeah,
that's
yeah.
super like insider type stuff. So but yeah, lots of different activities, asset classes as well, like storage facilities, like self-storage.
Right.
That is within the bubble of real estate investing.
Yeah,
Apartments versus single family, like, short-term rentals versus long-term rentals versus
yeah.
mid-term rentals. There's all these kind of different niches within real estate investing that people, kind of they tend to niche down after a few years once they've figured
Hmm.
out kind of what they're interested in and what works,
Yeah.
similar to what we do as bookkeepers. So it's really no different there. But yeah, just be aware of that. And then number two, lots of entities and properties to track, as you could probably guess, right? And
Yeah.
so, especially with rental properties, asset protection is huge. Like even from the get-go, just like normal business, protect everything from your personal, right? We want like a very clear
Hmm.
separation there. But with real estate, you know, it's a popular structure to have some sort of holding company. You got the person, you got the holding company. It's just a disregarded, pass-through entity, and then you'll have 30 subsidiary LLCs, right? That hold a
Mm.
property, hold multiple properties. It kind of depends on what their risk tolerance is, what their strategy is with that. But lots of different entities to manage and keep up with. Lots of partnerships, so you'll have filing entities versus disregarded entities. That side of it can get complex somewhat quickly, but once you know this stuff, like you can do this, and
Yeah.
you have a competitive edge over everyone else who doesn't know that stuff. So,
Yeah,
um,
just being able to speak the lingo. Well, you're going to talk about lingo here in a minute, but just
yeah,
being able
yeah.
to have a conversation with somebody and use like those words and have them realize that you understand the nuances, like that's huge. That's a huge advantage.
Absolutely. Yeah, I mean if there are some people out there, and I'm sure they're great people, but they kind of start to market themselves as a real estate bookkeeper, REI bookkeeper, or whatever. But yeah, exactly as you said, Margie. Like if you don't speak the language of the industry, then people
Hmm.
kind of they start talking to you, and then they very quickly realize that like, okay,
Yep.
you're not an actual, whatever that you're advertising. So yeah,
Yep.
that the lingo is definitely huge. Yeah, we have like a little lingo cheat sheet. So yeah, entities and properties. So this goes directly into QuickBooks. So it's not just as simple as, we have said entity with said REI, and when I say REI, I mean real estate investor, and we're just going to set up a QuickBooks. It's not quite that simple. We have to start with their entity structure. We have to get very
Hmm.
clear what are the filing entities, how do things flow, partnerships, disregarded entities. We have to get clear on that. And then we can say, okay, we need four different QuickBooks accounts for you. So
Yeah.
some clarity on that, because I probably, this is one of the number one questions I get within our community is how many QuickBooks accounts do I have? There's some different takes on that. So our firm has been doing this for a little while. And so, I'll just tell you what works for us, and then you take that as you will. So each, each entity a part of the same entity structure and disregarded. So the entity is disregarded for tax purposes, just passes through to the 1040. All of those can go in the same QuickBooks account. And we separate those using the location feature. We just convert it to a business feature. Filing entities, so partnerships, as corporations, those require their own QuickBooks account. Okay. And so when you go to deliver the financials to the tax professional, they will thank you if you go by that structure. If you don't go by that structure, they're going to be very mad at you, and your client's going to be mad at you as well. Okay, so ask me how I know.
Right, right,
um,
right. So
and
I just need to interrupt you for a second.
yeah,
And we have, I don't know how many of you are on the call today that are currently in our fast track course. If you are in our fast track course, everything that he's saying right now about entities and setting things up special and paying attention to the taxes and being nice to the accountant, the tax preparer that's going to receive the books, like you, that is something you all should be very, very familiar with, because we take a deep dive, deep dive into that. If you are not in the fast track and this is going over your head, what he's saying, then grab the fast track so that you can understand what he's saying, like what the different entities are, how it affects the taxes, and how things need to be set up, because that's like a foundational thing. You don't want to like hop into what all of this stuff, this extra stuff that Max is talking about, if you don't have that foundation first. All right, back to you.
I love it. I love it. Yeah, we usually, when people join our community and they don't have some sort of general bookkeeping course certification, whatever it is, like we point them towards Acadian. We point them towards
Yeah.
just companies like Acadian. So yeah, I love that. So last part, number two, is just properties. So we have the QuickBooks now. We have multiple entities potentially within the same QuickBooks. Got that build out. And so how do we track the properties? And so you can use the class feature. Class feature is great. You can also use the customer feature. The customer feature is actually what our firm, Time Capital Bookkeeping, uses. And so, back in the 2021, the very beginning of me kind of starting to do all this stuff, I did both. Two different clients, customer feature, class feature. I ended up going with the customer feature, and that's just a preference. So you find out what your preference is. Something significant to know about the class feature is, with the subscription levels within QuickBooks, you have the plus, and then you have advanced. And so plus limits to 40 classes, I believe, if that's still a thing with QuickBooks. And so if you need more than 40, you have to go to advanced. And we all know how big of a jump that is as far as the cost of a
Right.
QuickBooks advanced. So, so yeah, that's a significant point about classes. But customer feature, it works basically the same way. You can pull anything and everything you would ever need to pull, the whole business down to each individual unit that's being managed within that business. So,
Awesome.
good way to do it. Chart of
And
account. Yeah.
as a reminder, guys, customer allows you to have like a full on different. Allows you to have like a full on different addresses and phone numbers and contact information and all of that stuff. Whereas if you're using projects, it's all tied to the same one. So that's why you would use customer versus project. I don't know
I
if
like
that
it.
was a question that anybody was going to ask, but
I'm sure.
it's
Yeah, I'm
more
sure.
robust. It's more robust for what you guys are doing. Yeah.
Yeah, yeah, and we actually get a lot of questions about the project feature as well, because so specifically within house flippers, if you guys have seen HGTV, almost 100% of those shows are house flippers. They don't call
Yep.
themselves that, but that's what they are,
Yeah.
just for reference. And so, with our flippers, a lot of the times they want to use the project feature because that the terminology makes sense. But as far as how we code things for flipping properties, and I'm kind of getting ahead of myself, but not really, because we're in the chart of accounts section now. And so, so everything for flips goes to the balance sheet. So like maybe you think like, okay, I have an expense for an active flip, it should go to cost of goods sold. It's actually not true. It goes to the balance sheet, inventory, asset accounts, and transactions that are coded to the balance sheet do not show up in that project dashboard. And so
Oh, right.
that's one of those disconnects
Yeah.
with the project feature. And so yeah, just something we typically say we actually don't, we tell our clients or prospects or whatever, we don't need the project feature because anything and everything you need to see for each individual flip project, we
Mm-hmm.
can create a custom report and we can just give you the link to that custom report and click that link and boom, you have all the data that you need. So,
Awesome.
um, yeah, so that's that. So two-dimensional chart of accounts. Some of you who are familiar with the real estate, bookkeeping world, you've probably heard of this. A few different courses kind of go into this, but basically we don't want to see any property addresses within our chart of accounts. That's kind of one of those like beginner mistakes. One, two,
Oh.
three Main Street, 546, Main Street. Because what that's going to do as the portfolio or the business grows, it's going to stretch out the financial reports way too long. So
Mm.
it's basically going to make, balance sheet, P&L, just everything way too long, like almost unreadable. Because,
Yeah.
we want us as investors and, as client, we want our clients to be able to make data-driven decisions off of the financials that we provide them, right? Like
Yeah.
that's a major value that we provide. And so we want to keep those readable at all times. And so the main chart of accounts, it's just going to have, instead of 123 Main Street mortgage, it's just going to have mortgage, right? Conventional mortgage or hard money, whatever it is. And
Mm-hmm.
so that will give, if you just pull a normal balance sheet, P&L, and QuickBooks for a large real estate portfolio, what you're looking at is the entire portfolio put together and also non-property specific transactions. Um, and then we can drill down, right? Because we have the customer feature, we have the class feature, we have the
Mm-hmm.
location feature. We can drill down into whatever we need to drill down into, but we want to keep the main chart of accounts as concise as possible. So that's just a note on that. Anything on that, Margie?
No, I think that's brilliant. I hope everybody wrote that down because what did he say was a beginner mistake? A beginner mistake. He said you should never ever have the property address on the balance sheet. So for those of you who have REI clients already, and I saw you guys posting in the chat, some of you do. That's something to check out. Check out. So that's brilliant. Yeah.
Yeah. And, just to clarify, like if a real estate investor, they have their three rental properties or whatever, and they say, I 100% am, I'm never going to purchase another property, which is not really a thing with real estate investors. But if that was the case, it's fine. You can have what we call a one-dimensional chart of accounts, totally fine. But most business owners in general, right, are looking to grow over time. And so we
Yeah.
just want to make sure we have the structure set up so that we can facilitate that. So,
Awesome.
um, REI lingo, we already touched on that a little bit. I mean, that's just huge. Like, if you guys haven't heard of, there's a company called Bigger Pockets, biggerpockets.com,
Hmm.
started back in '07 or something, way back. It's just gotten really big lately, probably within the last 10 years. So that company, they are a real estate investing education company. And so
Oh.
similar to Acadian, honestly, but they just educate people on how to invest in real estate.
Uh
And
huh.
so you can go there. They have a forum. They have a publishing company, so they have different high level investors write books, and they flow those books through Bigger Pockets, so you can access those there. But yeah, just check out Bigger Pockets and start getting
Yeah.
some education of how
Yeah.
real estate investors talk. So
Yes.
um,
Yes. This
lingo is
is one
huge.
of the things, guys, that we were talking about with Mike a couple of weeks ago. If you guys were on that call, about when you're picking a niche, that you want to learn everything about that niche. Like become obsessed with that niche, whatever it is, whether it's beauty or food trucks or real estate investment. Like become known in that niche. Understand the lingo. Understand the challenges. Being able to speak and understand what they are doing is like that's huge. It's not just about the bookkeeping, it's about the whole like industry and what's happening. Like when Max started the call and he said something like, well, here's a little insider secret about what's happening in the industry. That's the kind of stuff you guys need to know about whatever you have picked. All right, go on,
I love it. I
off my
love it.
soapbox.
I love it. Yeah. So the last one, we have a student community. Students ask questions, and it's like an exclusive thing. And so a lot of the questions we get in that community are, okay, client has a rental property, they bought this for the property, capitalize or deduct, right? So like in
Mm-hmm.
real estate is incredibly balance sheet heavy. So like that's a
Yeah.
nuance for that industry.
Yep.
The thing is though, it's not that simple. Like I actually built a to capitalize or not cheat sheet, just like
Oh,
for rental properties. And it's kind of flow chart style, yes, no, kind of binary.
yeah.
And I built that for our internal team, and now we give that out through our courses and stuff. But yeah, it's very helpful. And that one cheat sheet, I think it's
Uh-huh.
a few pages long. I had to devour like 3 different IRS publications to get
Yeah.
that. So like it's not super
Yeah.
straightforward. There is some flexibility within the tax code for tax strategy. So
Mm-hmm.
real real estate tax strategy is massive. So like
Yeah.
if you have real estate clients, a lot of them are
Yeah.
just investing in real estate for the tax benefits,
Yep.
depreciation, all sorts of stuff. There's all sorts of like loopholes within the tax code for specifically for real estate. And so if someone buys a uh, you know, HVAC unit, we're definitely capitalizing that, but maybe something that's not super clear, like
Mm-hmm.
we just bought all this furniture to furnish the short-term rental.
Mm-hmm.
That's going to be one of those things that is subjective. Do
Yep.
we want to lower our taxable income this year, or do we want to maximize our taxable income this year?
Yep.
So there's flexibility within the tax code, which makes this a little more complicated. You guys are like
Yep.
catching the drift with the complication of this niche,
Yeah.
but once you figure this out, once you make great relationships with your clients' tax professionals, which is huge for real estate, you have a massive competitive advantage over other people who are trying to do this. So
Awesome, awesome. And I I don't want to sound like a broken record, but if you guys need if you do not understand the difference between capitalizing and he's using the term deducting, but I would use the term expensing. Like
mm,
if you do not understand the difference between those two things and why that is important and why you can't just, buy a house and write it off on your taxes, then that's why you need that foundation that's in Fast Track. I know people have been putting in the link there, but like it's just so huge to lay that foundation so that what Max is talking about on top of that makes sense.